I think it's fairly consistent with the picture we've seen over the last 6 to 8 months, which is markets have been choppy, they've been volatile. To a degree you've had sentiment trading. You have this broad slight disconnect where developed markets seem to be continuing to trade up. You mentioned Wall Street and the US more broadly at kind of highs back to April 22. Yet if you looked at the economic data, you looked at the direction of travel for the US economy, that's not necessarily what you'd imply. Profit margins certainly coming down, potential for recession versus Asia. Well, Asia, the story looks quite different. There is certainly not the recessionary risks we see there. The interest rate discussions are generally around some of the larger economies paused or even clearly dropping interest rates. So on that basis, you say, well, Asia should potentially have the opportunity to move ahead and do well. And yet what we're seeing continues to be relatively positive for developed markets and still pretty choppy, pretty volatile on Asian and emerging markets. And I don't see that changing in a hurry during 2023. I think more broadly it's very interesting if you look at that for Asia late 23 into 24 in terms of the opportunity.
How much of that disconnect is because Asia is more tightly close to China and we're more sensitive, more exposed to what's happening over in China, the slowdown there, the concerns there, the challenges that's happening in that big economy?
I don't think you can escape that within Asia. Two potential reasons for that. Clearly, if you look at it purely on an index basis, China is a dominant part of the Asian index, even the emerging markets index. So it will weigh on, the index returns as we see that. Asian companies are interesting. They do a lot of their trade within the Asia bloc, and clearly China would remain a part of that. But we shouldn't underestimate the ASEAN bloc, the rise of India, some of those other elements. But you've probably got, the sentiment around what is happening in China. GDP growth still looks positive, but there are concerns around the economy, some of the data we've had out, versus, well, what does happen if the US goes into recession, as we believe in the second half of the year? What does that mean for equities globally, but particularly how does that impact supply chains? How does that impact companies in Asia?
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.